What is a syndication is nothing more than multiple people getting together, pooling their assets to accomplish something. We see syndications all the time. You go to the movie, and at the beginning of the movie theater, they talk about the 6 or 7 different companies that have helped make this movie. Okay, that's a syndication. Literally, when you get on an airplane, I don't have enough money to own an airplane and I can't fly, but 130 of my closest friends and I jump on an airplane. We take off and we get somewhere with professional management. Okay. That's a syndication. Our life insurance is a lot of things are syndication.
Hello, everyone, and welcome to another episode of The Adventures of a Real Estate Broker with Daniel Berger. I'm excited to have on this week Gene Trowbridge, who comes to us with over 3 decades of experience. He was a real estate broker, he was a syndicator, and also he's been an attorney in securities for over 30 years as well. So he's reliable, responsive, and direct. That's his business motto. So I think we're in for a treat today. So with that, Gene, thank you for coming on the show.
Daniel, I appreciate it. I'm intrigued by the title Adventures of a Real Estate Broker.
That's a great question, and I always
Oops,
I should go away. I should always have my book with me, but I actually wrote a book with the same name this year, The Adventures of a Real Estate Broker. It's on Amazon. For me, we all have adventures, right? So getting into this business, crazy things happen. I have stories of guns in houses, dead people, guns, skulls, pornography, cars that you have to sell, things like that. And so it was just basically a story of I have 13 snippets of stories that have happened along the way. And for the most part, everyone in the book enjoyed being in the book and being involved in a chapter. So it's just really talking about the trials and tribulations. But with 30 years of experience dealing with the legal compliance and fundraising, that must be something that's you got your own stories, I'm sure.
Yeah, that's 30 years of being a lawyer, but the 20 years that led up to that was pretty exciting. Daniel, I started in my world graduating from college and going to work as a mortgage broker. And so the very first thing I did way back then, there were only 2 types of loans you could get. You could get either conventional with 25% down, or you could get FHA, VA. And I worked for a company in the Twin Cities, Minneapolis and St. Paul, that did FHA and VA loans. And I got paid a certain amount, but as I continued to do more and more loans, I noticed that my 1% didn't compare to the 6% that the brokers were getting when they brought the loan to me, and I helped them buy the house. So I thought I'd head off into the real estate brokerage business of selling houses. I didn't know that 6% get divided up a number of ways. So I finally learned that, but I was not a good house salesman. I just couldn't do it. The last straw was one night I was at a couple's house presenting an offer, and we were sitting at the kitchen table, and they both got up and went into the living room and knelt down at the couch and prayed about whether they would accept the offer or not. And I thought that I don't mind praying, but I had enough of that. So I talked to some people I knew and I found out about CCIM courses. And CCIM teaches you about commercial real estate. So I went and took the CCIM programs. And by 77, I was a CCIM and I went to work selling commercial real estate. Once again, I wasn't the greatest salesman of all time, but I did find something that I liked. I bought some real estate myself, and then I found something that was too big for me to buy by myself. Too much money. How every syndicator starts. They find some real estate that they can't buy by themselves, or if they could, they didn't want to put all their money into it by themselves. So I went out and found 3 guys I went to college with, and we bought an apartment house in St. Paul. I didn't even know what syndication meant, and I certainly didn't know what the securities rules were. But I liked doing that, and I found that I could raise money from people. For the next 20 years, I was a syndicator. And basically, what I did was build storage, self-storage facilities in Southern California, three-county area. I found that there was a need for people, and once again, this was started out in very early 80s. The people who had $100,000 or more didn't need to make an investment that gave them a little check every month to buy groceries.
Right.
They wanted to build equity. So how do we build equity? We build real estate. So I went out and bought dirt and built self-storage facilities. And when they got to be about 20% occupied, I sold them to real estate self-storage managers and who handled the long-term management. Because all I wanted to do was to build double or triple people's money and move on. And so I did quite a few of those 32 projects. And through that period,
Do you ever look back? Are you happy that looking back, are you happy that you sold them? Because storage facilities are an
well, they're
amazing,
great.
seems to be like an amazing business, right? Where people can't get enough of them. And I know clients that when they're in between moves, a lot of them are full. It's like the demand is so high with a lower supply. I'm on the East Coast, but it seems like, that's an amazing business.
Sure. And now condos get smaller, and sometimes they don't have garages, they only have carports. And sometimes they don't even have that. Where do you put the extra mattress? Where do you put your snowmobile? Where do you put that stuff? You put it in storage. And there's a whole study about how many square feet of storage has to be for every house in a community. And it's quite a what am I going to say, an industry that's quite grown up compared to when it was when I started.
Right, it's not just the land you throw like a shack on it, and then you just get a little bit of you hope that people will pay or whatever. It's also, but that your industry in Southern California also created a whole television industry of the storage wars.
Yes,
So
I guess that's the truth. And when I started, the thought was a storage facility was just pretty much cement block with a chain link fence around it, and it
right,
was
no climate control.
no, it was a land holding. While you're waiting for the land to be of value for something else, you threw up some storage. That, even when I was in the business as it was maturing, things changed. The businesses, the one of the things I wanted after running a few apartment buildings was I wanted 500 or 600 units, Daniel, and one toilet where no one slept there overnight. And that was a pretty good explanation of storage facilities. So I was building storage facilities with the live-in manager quarters. And now that's even changed. That isn't really the normal now because the industry doesn't like people living there because it's hard to get them out when they want to be fired, want to fire them.
Right.
So it's,
Well,
and
you
it's
know,
electronic. Everything's electronic now.
people talk about passive income. That seems to be like much closer to passive income than other things, right? Other things are more headaches, more risk, insurance claims, and things like that. So you stumbled on a couple of things, right? Because what I like about your story is that you just did things and then you're like, yeah, that's not really for me. I'm going to move on. But then you kept finding other things. And what's interesting is I think the syndication is one thing that's interesting, but also obviously what you syndicated in the storage facilities. That was like in the beginning of those really they've been around, but it wasn't as popularized and as profitable, I bet. Talk to us a little bit about what syndication is. How does someone go about either creating a syndication or investing in a syndication? And then you've dealt with also legal compliance about that. What are some of the legal things that people need to pay attention to?
Sure. I wish I'd been around when you were writing your book. I have one adventure of a real estate syndicator and mini storage I'll tell you about. I had run a half marathon on the 4th of July many years ago, and I was upstairs I live in Southern California now, in the bathtub, and my wife brought the phone up to me and she said, the sheriff of Barstow, California, the sheriff of Barstow is on the phone for you. So I'm in the bathtub. So I took the phone and the sheriff said, 4th of July, hey, we arrested a guy at a bar the other night and he was dealing drugs. And the only identification he had in his pocket was a little handwritten receipt that he'd paid $100 for storage unit 142 at the Barstow mini storage. It's the only thing he had, and we want to get in there. And I said, I bet you probably do. I said, do you have a warrant? No, we don't have a warrant. It's the 4th of July. The judges are all on vacation. I said, I'll tell you what, my manager's on vacation too. There's no one there. You get a warrant tomorrow morning and you go out there and talk to the manager, and we've got a lock cutter, and we'll cut the lock and we'll get you in there. And they did. And the guy was cooking meth in one of my little storage facilities. Lucky it didn't burn down the whole place. But
So now you're responsible for Storage Wars and potentially Breaking Bad. So
yeah.
maybe you should have been, maybe, I don't know about the book, but maybe you should have been a story writer for Hollywood.
No. So anyhow, that was it. What is a syndication is nothing more than multiple people getting together, pooling their assets to accomplish something. We see syndications all the time. You go to the movie, and at the beginning of the movie theater, they talk about the 6 or 7 different companies that have helped make this movie. Okay, that's a syndication. Literally, when you get on an airplane, I don't have enough money to own an airplane, and I can't fly, but 130 of my closest friends and I jump on an airplane. We take off and we get somewhere with professional management. Okay. That's a syndication. Our life insurance is a lot of things are syndication. The only thing that those things I'm talking about don't have to make it the syndication industry you're thinking about is they don't have a profit motive. Pretty important. So now I'm putting together groups. What I was doing is putting together groups to do mini storage because of the profit. Okay. Now, when you're raising money from people, putting their money into deals, and the people are counting on you to make it happen, you'd think the government would have an interest in making sure what you're doing is right for the investors. Okay, so here comes the Depression in 29. Here comes 1933, and the government decides we're going to create laws for that industry. And they're the securities laws, because a security is when people invest their money in a common enterprise with an expectation of profit, but it's run by someone else. Their money is passive and someone else is in charge of their money. So the laws were created to do things so that the person who's in charge of the money does it and the investors are protected. Okay, so that's a security.
So if 4, let's say 4 entities get together, and one of those 4 entities is going to be running the project, right? Running the building. Is that still considered?
Sure.
So
If
that
I'm
would,
in charge of your money, we actually it could go worse than that. Let's say we decide we're going to buy something together, and you're going to put up 95% of the money and I'm going to put up 5. But you don't want anything to do with it. You're just going to let me handle it all. Okay, so we put together an LLC. You're a 95% owner, I'm a 5% owner, and I have all the management responsibilities. From your viewpoint, that's an investment of your money in the common enterprise of the LLC. You only did it probably because it's not a GoFundMe deal. You did it because
right.
it's a profit, and I'm in charge of your money. That's a security, and the whole world of securities laws falls on my shoulders to make sure I do it correctly to protect you. How about that? So there's a lot of your real estate brokers out there that are combining money of friends and family and running out and buying stuff that aren't doing it right. Okay, I understand that, because they aren't following the securities rules. They don't think they have to because they think, hell, it's just friends and family, Daniel.
So if you have, there are documents that you need to formulate the LLC. The LLC says what percent each person owns.
Sure.
It might say that there's a management fee, right?
Sure.
So there are like an articles of incorporation. So are things that need to be done different than that from a securities perspective?
Yes, the securities laws that we work in, there are a number of 5 or 6 specific laws, and the first law is about disclosure. And I, as a sponsor, am required to give you all the pertinent facts before you invest, so you can make an informed decision. So it's a private placement memorandum. You might have heard that term, or a PPM. It is the operating agreement. It is a subscription agreement. It's filing notices with the SEC, with the state in which you live in. So there's a lot of rules that go together. And that's one of the things I saw as I was doing all this work. I came through a 20-year period of time where a lot of crazy things happened in the securities world, primarily dealing with times where there was no money available because financing went away, dealing with the 86 Tax Reform Act, which totally changed the way everything was done. And it just, for me, I got to a point where I was big enough, but I didn't want to get any bigger. So I decided, and I was in my mid-40s, what am I going to do for the rest of my career? So I decided to go to law school. And I went to law school for one purpose, so I could be the attorney in the syndication securities industry, and I could deal with the paperwork, not the tenants, toilets, and trash, and the investors, because the care of investors can be overwhelming. When I finished, I had 1,876 K1s I sent out the last year. And I'd had enough of that. So this business is a lot easier on my health and my mental deal. And I do paperwork and I help people become successful in their syndication career because I'm a mentor. I've got 20 years experience. The other attorneys out there, no offense, are probably pretty smart attorneys and might even be better attorneys than I am, but they don't know anything about syndication. They don't know.
No, I think you're specializing in that because of your background in mortgage and real estate.
Sure.
And also you're probably, so you're, are you still working? Do people still come to you to put deals together and get the investors?
I don't do any syndication. That would be a conflict with my legal business. I would just represent people like you who wanted to get the paperwork right so they could go out and get the investors necessary to buy the property. That's what I do.
If you have an LLC of two partners and they're both they're both going to be hands-on,
That's okay.
so the securities laws are a little different because they're both active. It's just basically it's shared responsibility, shared. And does it matter if it's 60-40, 50-50, if it's just two entities?
Okay, let me answer that. That's a two-part question, really. If Remember what I said, the definition of a security, the fourth prong was through the efforts of the promoter or someone else other than the investor. So if there's two of us and every decision, every major decision has to be unanimous. Okay, then you're not really counting on me because we're doing it together. So that wouldn't be a security. That's when that would fail. But how about this? I've got 95% of the money and you've got 5. And I say all the decisions need to be based on a vote. I'm not the manager. We're just going to vote. And my 95% vote handles everything. I guess I'm in charge. So the two things are if it's done totally together unanimously, it's not a security. But if there's a difference in the voting rights and one person is in charge, it's a security. So
Okay,
how we would do that, if I had 95% and you had 5, every vote had to be unanimous. We have 2 votes to sell. Your vote and my vote isn't any more than yours.
Right. I'm in a couple of situations like that. One, it is 50-50 and we both are actively manage it. I'm in with a contractor and so me being the realtor, I'll do the real estate part.
Sure.
And he does the contracting. So I guess
Perfect.
most of your deals, you're laying the foundation for when things hit the fan, right? Because if everything runs smoothly and they buy in, then it's not the issue. It's the issue when somebody wants out or somebody thinks that they're not being taken care of, right? Because from your perspective, you're laying everything out is more legal, not tax consequences.
It's because the tax law is a little different for these entities, an LLC, a limited partnership, a corporation. The tax law is different. So I have to know that. my clients need to get their own tax advice, but I know enough to tell them where to go. I think the thing that is different about this industry now is you buy a piece of real estate, it's going to last 40 or 50 years. It's an apartment house. What's going to change? But you put 20 people in a fund that you say we're going to own this building for 10 years. What are the chances that one or two of those 20 people has a life event?
And needs to sell.
And now you're the sponsor and you need to solve that life event. And they need their money. They get bankrupt, they get divorced. There are all sorts of people there. The care and maintenance of investors is what drove me out of the business. All those investors that I had, there was always something going wrong with the people, not necessarily the real estate. So it's a people business, no question
Right.
about it.
So in that case, I'm assuming in the case of having 10 or whatever, multiple people, the rules before you get in, the prospectus is supposed to tell you what do you do in the situation if somebody needs to get out,
That's
right?
right. The
Because
private placement memorandum tells the story. It's not really a legal document. It's required by the securities laws to give a disclosure to everyone, but it's the operating agreement. That's the contract between the investors and the sponsor. And then the bank looks at the operating agreement too to make sure that the operating agreement says the first thing that's going to happen is we're going to make the mortgage payment. So there are people that are involved, but it's the operating agreement. And so you need all that stuff ahead of time. Before you raise a penny, you need to give the investors what the rule is, so all the material facts ahead of time so they can make an informed decision.
and I'm assuming the rules could be anything that group of people
Oh,
agree to.
absolutely.
It could be like you can't get out or you have to sell it. I
Right.
guess one thing could be you own the share and you can sell it. Or I would think that there'd be a first right of refusal that one of the other partners might
Sure.
want it. Or if you
Claim it
have to
all.
go right, or you have to do it to yourself, or you have to then you have to go find the person. So I guess it all needs to be laid out. What normally would happen in the case of somebody wanting to get out? What do you
Well,
advise?
in my offerings, the person you want to get out, so you're responsible to come to me. You're required to come to me and tell me I want X number of dollars for my share. That's your responsibility. Then if I know that, there are three things that I can do. I can go to the other members. Maybe the first right of refusal is the members in the entity and see if anyone wants to buy all or some of yours. Okay. And then if there's still some left, then I go to the company. Does the company have money to help liquidate you? And then if that doesn't happen, then the third step is, can I do it as the manager? And if those three things don't happen and there's still something left to sell, go ahead and sell it to whoever you want. But there are some rules about who that person is when they come in the company. Generally, Daniel, we can't stop you from selling the economic interest in your units, but I can stop the buyer from voting if I don't know who the buyer is and it isn't the right person. Okay.
So I like that you say that if the company has the money too, because I guess that's the way that you buy back the shares, like a stock
Sure.
buyback, and then everyone else gets more. They would increase their shares in the same percentage that they already own it. So
Sure,
that
that's great. And you talk about adventures of a real estate broker because my practice, my law practice is tied up with mentoring people who want to raise money. And it doesn't always have to be real estate. I did a barn of racehorses down in Del Mar. I did a 25% of a professional hockey team was sold to a group of investors. A fiber optics company. Right now, I'm doing a French Vietnamese restaurant in Old Town, Scottsdale, and avocado groves, all sorts of things, because everything needs equity. You start a business, you use your own money, you use your parents' money, you go to the bank, and then you're short. Where is it? You'd be surprised how many. The one that I thought I was going to do was really neat. A guy had an invention and he never really got the patent, but the invention was a little machine that was designed to be in a doctor's office where it would replace washing your hands with soap and water. And if that worked, just think how many times those guys wash their hands with soap and water, and they just stick in this little machine and electronically it kills all the
Right.
bacteria. And they had done that. They had used their own money, they'd used their parents' money, and now they needed more money to go ahead and finish the patent. And it fell apart. But I've seen all sorts of crazy things when people need equity, and it's really exciting to help people out. But my true love is to help real estate. I had an interview in 2014, Daniel, with a guy and his son. I went to their office and they had seen something on my YouTube channel. So they called me into the office and they said, we're thinking about doing this type of real estate work. Okay. And I went through what I could do for them and the prices and everything. And I walked out of there and I said, that was a neat meeting. Those are cool guys, but they're not going to hire me. I just know it. I get back to the office. There's a phone call. Can you come back? We want to get started on our first deal. So I turned around and came back. And from 2014 to 2024, when they retired, which is 10 years, they did 164 LLC offerings.
Wow.
I could have, if I didn't have a company and other people working for me, that could have been
You
my
could
livelihood. That would have,
exactly.
I would have
So
been a
you're
kept man.
you're currently in Southern California
I
and
am.
from Minneapolis, from Minnesota.
Yeah.
What other, assuming that the deals that you help put together, you need to have law licenses in those states as well?
No, the securities law is federal law. There's no licensing required by me. I just need to be a lawyer and follow the law. There's really not much state specific because we can't have an offering governed by state law because if you're in, where are you?
I'm in New York.
You're in New York and I'm in California and we have an investor in New Mexico and the deal goes bad. Where's the lawsuit? So
Right.
federal law, we cross state lines. Federal law takes everything. You can do an offering totally inside of one state. If you're in New York and the property's in New York and the investors are in New York, you can do just by New York law. That's all you need. And then I couldn't do that. Okay. But the minute you cross state lines, it's federal law, and then I can.
Do all the investors have to be in the same state for that to work, or most of the money?
All the investors, because we can't have an investor in a different state because we can't go there for lawsuits. So that's called a 147 offering intrastate. Everything is in the state. Now, the money, 80% of the money has to be invested in the state, meaning you could have 80% in your storage facility and 20% in a savings account that's in a bank in somewhere else. But 80% of the money has to be there.
Excellent. That's really helpful. So when you were talking about, so how long have you not been in Minnesota?
79. I came to,
79.
I got out of the snow in 79. And
So
so,
in 93, my first job out of college, I sold insecticides and herbicides in Southwest Minnesota, Laverne, Worthington, Mankato, Sleepy Eye, Walnut Grove. So I was the New Yorker in the Little House of the Prairie. So,
that's cool. Yeah.
but I should have really gotten into storage facilities because those are still killing it to this day.
Mhm.
Those and car washes.
Yeah,
So
we have a couple syndicators who do car washes, and with the current tax law, the immediate write-off and everything, it's just a killer for tax benefits. So,
what are some of the other I think that's a good segue. What are some of the other industries that you feel or that you see that you're working on for syndicators that
okay.
you feel that are up and coming?
I think there's always a shortage of supply of housing. I think there's an imbalance of supply and demand. So I think there's always a need for housing, and that's probably the number one type of real estate that we do. RV parks, mobile home parks, storage, of course, because of my background. The things that we don't do a lot of are industrial properties and hospitality. It's been a long time since I've done a hotel, but I was on the phone this morning with a guy who's got an idea. He's going to buy a piece of dirt in Florida. He's going to build a duplex and he's going to make it configured with 10 bedrooms and 10 bathrooms, and sell rent each room for a lot of money. You get just a bedroom, a little kitchenette, and a bathroom. That's what you get in there. That's all you get. No living room or anything like that. And put it in the area where working people live.
Oh,
And
so right. So it'll be people can stay there instead of going home if they're working late or if they're
they
traveling.
live there.
People, they
They
live
live
there.
there. They live there. And he showed me some models of some people in Houston that are doing this, and it's pretty lucrative. It's a pain to get it going because you can imagine the zoning and the construction and all that stuff, but interesting idea. So housing, I think, is always been number one in my.
How about things like senior living? Because with the graying of America, it seems like that's housing. It's just housing
Sure.
for people towards the
Sure.
end of life.
You'll find that syndicators specialize. Okay. And I don't have any syndicators as clients who specialize in senior housing. I do have several clients who specialize in a different type of senior housing where they take a 5 bedroom house and they put 5 people in there, and they have ongoing care, got congregate care or something, but no large projects.
Okay.
So that's just because I don't have any clients like that.
You did what, 1800, was it 1800 10Ks that one
Investors.
year? Right. That's insane. So that was a ton of business. But what else do you think as we wrap up? What do you see as the next 3 to 6 months to a year? With everything, with the economy, with what, the supply, the demand, with money, where do you see you're going to be active in the next near future?
I think the three things I'm watching, certainly interest rates. As interest rates come down, the market will pick up. Starting in 2000, at the end of 2022, the deal flow has slowed down. Interest rates got higher. So I think that'll help the deal flow when interest rates come down. Another thing that'll help the deal flow is all these 5-year bridge loans that were placed in 2022, 2025, 26, 27. Those bridge loans are coming due, and a lot of syndicators have to figure out what to do with that. How do they refinance that? And if they can figure that out, that'll be good for the industry, because right now we have an awful lot of sponsors are just working on capital calls, trying to save the deals that they put together in the early 2020s with bridge loans. It's just amazing. And then there's, in the securities laws, there's some movement toward opening up the definition of accredited investors, so that in the securities laws, the way I do it, there are two ways you can market. One is just people pre-existing relationships, and advertising, solicitation. But if you advertise and solicit, you can only take people that are accredited. And there's a move afoot to expand the pie of accredited investors in the country, because the rule on accredited investors was written in 1981. It's the same rule, but they need to expand that. But then you have the securities industry saying in 1981, Daniel, when we wrote the definition of an accredited investor, only 3% of the households were accredited. Today, it's between 18 and 20. People's earnings have gone up. People's assets have gone up. And the SEC on one side says that's too many households that are accredited that really don't get the protection that's needed in the type of offering that's just for people that you know. Over here, it's a Wild West, but just because you make $200,000 as an individual, you still might not be economically sophisticated, but you're accredited. And so we don't need to protect.
You might be economically sophisticated, you just might not be sophisticated.
Yeah, boy, it's,
That's
on your
another
job.
just because you have money doesn't mean that you understand what it's about. That's, I think, the point of it, that the government, people want to make sure that an accredited investor is somebody that understands the risks and what's happening from this investment. That seems to be
Right.
what the protection's about.
And I have any number of sponsors who just disregard that rule and say, you need $500,000 of income and $3 million of net worth to get in my deal.
Again, it's about supply and demand, right? And if somebody and if someone that's looking for money can say that and still fund the deal, of course you'd rather fund the deal with the people that have more money because they're going to care less, right? Your deal is going to mean less to them than someone else. That it could be their entire nest egg, and it's more responsibility.
And it's always the smallest investor that calls you the most and
Right.
hits up with the biggest problems that you have to solve.
Exactly. That's with anything. But thank you. I want to thank you for your time, Gene, for especially you being 3 hours behind and coming on so early. Thank you very much. You're reliable, responsive, direct. Legal compliance and fundraising are important parts of growing the business for syndication and to help guide people through the process. Thank you very much for coming on.
I appreciate it. Thanks for having me.
Okay. So everyone, it's Daniel Berger with the Adventures of a Real Estate Broker. Thanks for tuning in. And until next time, thank you very much. If today's stories opened your eyes, wait till you see what's next. Hit the video on screen to join the next adventure with Daniel Berger.